Okay, thanks for sticking around. We got to talk to Chase about some little more detail about some things that he's talking about. And Chase, I'm going to start. It's Kevin. I have a client, a big client, a smart client that he's a big believer in, or not believer, but a big kind of China follower. And one day he sent me this email and he said, "You got to read this guy. This guy understands China. He gets it." And do you know whose letter he sent me? He sent me yours.
Yeah,
So I just kind of wanted I'd like to talk a little bit about your theories about China and what, in terms of the game that they're playing, in terms of, I guess, from a technological point, the fact that we're not in a trade war in the regular sense of the idea, but more in a technological war. So why don't you kind of just go down that road and let's have a discussion about that, because I'm sure our listeners would love to hear it.
yeah, absolutely. And I think that everyone pays attention to the trade war, and everyone's reading every last word to try and figure out how many soybeans China's going to buy. And I don't pay much attention to that. I know when it comes to actual trade, they'll figure something out. They'll sign it. I just don't think it's going to be that big a deal. But I do think we are in a Cold War with China that's mostly going to revolve around technology. I think the only chance China really has to escape the middle income trap, kind of before their demographics really set in, is to have some major advances in their technology and innovation, and being able to domestically produce a lot of more high value added products. They kind of run out of room to just build more and more stuff. There's only so many railways and high rises and stuff that you can build. So granted, they've kind of exported that excess capacity with the Belt and Road Initiative, which the U.S. kind of seemed like finally figured out that if we try to compete with them on that, it could slow down their ability to hide their excess capacity in the rest of the world. But them trying to fight us on technology is going to be a really big deal for the U.S. and for China. There's a lot of major advancements that are kind of on the cusp in technology, and who gets that stuff right is going to really be able to put themselves in a great position. It's something that I find interesting. I know you've talked about a lot, Kev, is the 2021 100-year anniversary, and the next Party Congress in 2022 in China. Wanting to go into that looking and feeling good. So I'm sure they will pump some stimulus. But in my opinion, they've reached a point where they're kind of pushing on a string with stimulus, and it would take so much stimulus for them to really pump their economy that I personally don't think they're going to go as hard on that as a lot of people do. And if they do, pump major stimulus, I think that would be them kind of trapping themselves into being a middle income country that kind of just fades into a lost decade, the way Japan did, personally.
Wow, I love what he has to say, Kev. That's definitely, I share a lot of your views on that, in terms of the fact that there's only so much China can do on the short term, and I think that this is all an overreaction that we've seen especially even today, when we see the first reactions off of the China data. There's just, in my mind, this is the probability that this is sustainable is just not high. I think that this is just a short-term overshoot that will mean revert to a downtrend that they're in.
Yeah, Chase, you got to remember one thing about Patrick. He's always bearish. He's just always trying to figure out ways that's going to do.
He's got a little bit of that financial justice warrior.
Yeah. So, Chase, what does this mean for investors going forward? Like, how do you position yourself if you assume that the Cold War between the U.S. and China is going to get worse going, in the years to come? And am I reading you right that that's what you assume, that this Cold War will increase?
Yeah, absolutely. I think you'll see more and more competition, whether it's with the Belt and Road, with the U.S. trying to kind of compete on that level in some way, or at least trying to stifle them. You'll see, what we've been witnessing with the Huawei kind of aspect of this whole thing. I expect to see more kind of conflicts of that nature, where if China takes the lead in a given area of technology, I expect to see, a significant response to that. But it's important to keep an eye on who is winning from the actual technology standpoint. And when it comes to the trade deal, like, what's going to be super important to look at is not how many soybeans they buy, but what do they actually give up in any way, shape, or form that would limit their ability to win the tech war? And I kind of expect that to be very little, or if there is anything there, for it to have weak enforcement. So getting to the bottom of that when that does come out is going to be important. And then, trying to dig in and figure out who is actually innovating well as we move forward is going to be important. The U.S. has done a lot in the last couple of years to beef up their ability to defend from China coming in and grabbing technology, whether it's through investments or, in Silicon Valley, or just actually stealing data. They have 350,000 college students in America, and a lot of them are STEM students. And a lot of the way those schools go about accepting students is changing because of the government. So kind of just keeping an eye on the way all that's playing out is going to be very important. But from like a bigger macro perspective, I think what's important is China. To me, China's at a really pivotal part where they're about to go crazy with stimulus and ruin their ability to escape the middle income trap, or they're going to keep actually reforming structurally and stimulate, but on a smaller cyclical level. And which of those they choose, to me, is gonna tell you everything you need to know. I think Xi would be happy to actually reform, but I think a lot of the powerful people in the country that have gotten rich and powerful on building high rises and trains, they're not going to give up easily on staying rich by giving that up so that they can build more microchips or whatever.
But how will the actual reform isn't too often their idea of competing on a technology on technology basis? Isn't that just as you mentioned, just stealing? So are you arguing so you've given kind of two choices, one being they continue to try to steal and go up the value chain on terms of technology, at which point the US is pushing back hard, or they go back to the old, just kind of build bridges to nowhere and empty skyscrapers and stuff like that.
Right.
Isn't there got to be a third option, or is there not? Is that all that we're faced with, is those two different choices?
I think they're going to have to lean one way or the other. And to me, it'll be obvious which way they go. One of the best ways to watch this is to watch real estate. They've tried to put in some reforms and some caps to keep real estate from becoming a bigger bubble. And they've held more firm on that than I expected them to. But so if they loosen all those real estate reforms back up and just let the bubble go crazy, then, in my opinion, they're giving up on trying to really transition their economy. And they're just going back to the old school. But if they go back to the old school, then they're destined to be another Soviet Union or Japan, in my opinion.
What do you think about the Kyle Bass theory that they're one kind of bad that their foreign exchange reserves are dwindling down and they're about to be gone, and they're going to have to be forced to revalue their currency at 50% haircut from here?
Yeah, I think they need to devalue, but I honestly don't expect it, especially anytime soon. And the reserve numbers have been doing better lately. I think what this is going to come down to is who's right between Kyle and Luke Gromen, because I know Luke thinks eventually they're going to be able to buy some commodities like oil in RMB, which will ease up that current account pressure. So if they could ever convince Saudi Arabia or somebody to sell them oil and take RMB, that would really give them a lot of breathing room, and then I wouldn't expect to see Kyle's theory come true, at least anytime soon.
Right.
Okay.
So, in terms of just a little bit off topic there, in terms of macro thinkers out there, who would you say influences your work the most? Who out there do you really love their macro narratives and the most?
So I've always been a huge fan of Kirill Sokolov. I just enjoy his thinking, and even I disagree with him a lot, but a lot of times he just makes me look at things differently. So I respect him.
So for those who don't know, he's the writer of 13D Research. Is that correct?
Yes.
Yeah. So he's outstanding. It's a great piece that it's expensive, right? It's tough to get, but he's a great thinker, and it's definitely one of those things that very interesting always to read.
Yeah, anytime I can get my hands on what anything he's thinking, I do it. In fact, he wrote a book back in the 80s whenever inflation was running high about how uh, the bond market and inflation was about to end and you should buy bonds. And I mean, he crushed that, you know.
Yeah.
So people that can see things like that coming before, and he was a very early investor in Hong Kong and China, made a ton of money doing that. So he sees the big turns, which I like studying people that see the big turns because it's probably the hardest thing to do.
Yeah.
And someone else that I appreciate a lot is a friend of mine, Alex Barrow from Macro Ops. There's so many macro people that I read their work and it's good and interesting, but it doesn't move the needle on my own thinking. And Alex is someone that somehow always manages to change the way I see things.
Oh, so he has a website here, macro-ops.com.
Mm-hmm.
And which one's the guy that you recommend? Which
Yeah,
guy is it?
Alex Barrow.
And how do the people find him? What's if you're interested in getting out watching Alex? Is there Twitter to follow or something?
Yeah, on Twitter he's just Macro Ops, and they have a pretty decent sized team there. He does a lot of their kind of bigger picture macro writing. But they have guys that do some value stuff and a little bit of everything. So sometimes it's hard to tell what work was his and what was theirs. But they write he writes a monthly that's always really good.
Oh, there you go. So when you were talking about Carroll back there and you were talking about the big moves, I couldn't help but think about the fact that Patrick and all these boys are so bearish on kind of inflation, and they always think it's going to go to zero. And I'll have to tell you something. Can we share this, Patrick, about where you were Sunday night? Can we talk about this?
Yeah,
we might as well talk about this. So Patrick got to meet his idol. And he's a really nice guy, but he Russell Napier, which is the king of deflationary, right?
Yeah,
Russell. It's easy to say he's a little bit of a deflationist. Would you not agree?
And rightfully so. He's been right, and he has a lot of reasons to be right. So,
So he's a terrific guy, and I met him as well, and he's very good. He's actually Irish. I didn't realize that. I thought he was Scottish. And he's a super nice Irish guy, as you'd expect. But I don't know if we need to get Patrick to kind of spend any time with any more deflationists, because it just gets Patrick all excited and makes him all the more negative. It just makes him come in and sell everything.
I will say visiting his library of mistakes is definitely on my bucket list.
Yeah, so he's what is that library? It's something about like the whole course. Well, Patrick, why don't you tell us a little bit about the course and about how it went, and kind of give us a little bit of a little synopsis there.
Oh, I mean, he brought in a bunch of great speakers and teachers that covered everything from historical valuations in the stock markets and what's one of the best ways to actually measure whether or not a market is overvalued or undervalued, and more importantly, what causes it to mean revert. And then he brought in John Greenwood, which is the chief economist at Invesco, and he did a phenomenal job talking about money supply and the impact on the business cycle and all this. It was really good. They got into behavior finance and forecasting in the next 10 years. So lots of really interesting things I'm going to be talking about in the future shows.
So it was just basically all you guys talking about how there's going to be no velocity and there's no money supply growth, so we're going to collapse.
Yeah, but I mean, a guy like, right? Well, listen, a guy like John Greenwood was basically talking about the fact that he thinks we're only mid-cycle, not late cycle, and he actually was forecasting 5% inflation next couple of years. He was actually in a completely different camp than Russell. It's interesting that
hey Patrick, did you throw up in your mouth when
yeah,
you heard
I did
that?
a little bit. Like I couldn't believe what I was hearing, this mid-cycle shit. And but anyway, I mean, it's certainly important to always take into consideration one of the rationale. In fact, I reached out to him afterwards to see if we can get more out of them in there. But I mean, really the one thing I think I took away from it was they really go back to studying the rate of the change in money supply and as a major influence to inflation expectations, and that no matter how much you can play this commodity cycles and all this stuff, that money supply in the end tells you everything you need to know about the bigger picture trend of inflation expectations. And really the conclusion I took away from it was that there needs to be something introduced that somehow changes the trends in money supply for there to be real inflation. It's not that it can't be inflation, but under the current system and the current trends, it's not a risk, is what I got from it.
Well, I'll tell you one thing. I think that that he's correct. The money supply has to pick up, but I think that's a backward-looking or indicator, and that
it's not a forecaster forward. That's for sure.
No, but I think that when you're looking at commodities, they're already telling you that money supply is picking up. So I think that what you're going to find is the money supply is going to follow what commodities and what risk assets.
Yeah, but I mean,
have
there's
done.
going to be bumps on the up. But is it the sustainable one? I mean, look, if oil is heading to $200 a barrel, then that would I would understand your point. But I mean, if we're now going to approach the top end of the range, then there's going to be a short-term surge in inflation, and then it's just going to the rate of change of inflation will wean right off, and then we're going to be back to where we started. And it was just a 6-month hiccup.
So, Chase, I got to tell you why Patrick was having trouble swallowing your inflation kind of forecast. Because we all know that oil's going right back down to 35 or 25 in the next little while. So, Chase, what do you think the chances, tell me where you think oil will be 6 months from now? And I understand you're not an oil, sorry, what did you say?
I said higher.
Really?
I think we're at a point in the cycle where it's just
so
that
the December swoon was just noise. It was just a liquidity event.
Yes,
and
I can explain it.
All right.
Yeah, the Saudi Arabia just absolutely flooded the U.S. with oil during that time, and it kind of for whatever reason, no one cares about global oil supplies. Everyone just cares about U.S. supplies whenever it comes to the price of WTI, and so it's pretty easy to move the price down. You flood America with oil, and everyone goes, "Oh my God, look at those, look at those inventories."
Hallelujah. Chase, you are I completely agree. People don't look at the worldwide kind of inventories. They're all focused on WTI or U.S. inventories, and they don't understand that it's a worldwide commodity. I 100% agree with you.
And the Saudis did that seemingly as a favor to Trump because he was wanting them to get the price down so much. So they chose to do it that way. And then naturally he kind of turned his back on him with the Iran sanction waivers. And then, I think that probably really upset them. And, lately they've been starving the U.S. out of oil, and it's starting to show a little bit in inventories, even though, they haven't drawn down significantly, but.
Yeah, so I have a question for you. With the recent floating of the Saudi Aramco bond, the long-term debt, they've had to release their finances, and you see that one of the things that was kind of released was the reserves or not the reserves, the production of the different fields. And a lot of people are talking about the fact that Gawar, which is the world's biggest kind of discovery of oil ever.
Kev, you got to just rewind because just start from the beginning, please.
What happened?
You chimed out. For
a
second
you
there.
dropped out.
Yeah, if you could just start for that, your little bit from the beginning there.
Okay, so where did I chime out from?
Just the sentence that you had started.
Just share your thought from the start.
Okay, you better mark down the time.
Yeah, I got it.
Okay. So, Chase, I couldn't agree with you more. And one of the things that I find extremely interesting is the fact that with Saudi Aramco recently floating that long-term debt issue, they've had to release some of their finances or some of their financials in terms of the different productions of various fields. And I noticed that some of the kind of more astute crude oil watchers have noticed that Gawar, which is one of the world's, or I guess it is the world's biggest kind of reserve, has not been kind of performing like everyone thought it had been performing. And I have a buddy that's a really smart guy that has been in the markets forever. And we were out for dinner the other day, and he told me that he's as bullish on oil as he's ever been in his life. And I was like, really? Like, I was like, wow, like, really? And he says, yeah. He says, they've just admitted to you that this whole Matt Simmons Twilight in the Desert is happening. And I said, oh, well, that's funny because all of the kind of fast money guys are short oil and they all think it's going down. And he says, all the better. And he's a long-term kind of fundamental guy. And he's convinced that oil is headed to the moon and that basically this Gawar thing is a much bigger deal than the market is realizing. What do you think, Chase? Like, have you looked into it?
I have, and I totally agree. I mean, when the biggest oil field in the world is producing a lot less than everyone thought, it's obviously a big deal. It sounds like a great time to monetize your giant state oil company, doesn't it?
Yeah, that's right. Yeah.
And and on top of that, you look at U.S. shale and how just unprofitable it is, and how fast the decline rates are moving there. Like, to me, there's a lot of different reasons to be bullish oil. I think if you look at the S curve and the middle class in Asia, where you're just having a huge explosion of people entering the middle class in Asia that are going to start consuming more energy. I just think there's drivers on the supply and the demand side for the next couple of years that, I don't know, make a lot of sense to me.
Yeah. So Chase, again, you're speaking my language. We're Canadians, so we call it the hockey stick curve. And on the demand side, if you look at kind of developing nations, and if you go back to Japan coming out of World War II, and you look at the energy use per person as they kind of got more and more wealthy, what happens is it ticks up bit by bit by bit, and then it just explodes higher. Like there's the kind of the bottom of the stick, and then it starts going straight up. Same thing happened in Korea. It started going up a bit by bit, and then boom. So it's the exact same graph: Japan, Korea, and now we're finally entering it into China. But the thing about China is that they are so much bigger than either of those economies at that stage. So I think everyone's focused on the supply side, not thinking about the demand side and looking at that. And I agree. I think that people should be looking at oil from kind of a long-term perspective as one of the cheap assets out there. The other thing about it is
I'm just gonna take the other side of that.
Yeah, of course you are. Of course you are.
I am, but you know what though, where I'll give you guys something is that I do actually think there will be a huge oil bull market on the other side of the business cycle. But I just think that you guys are talking a story that can manifest itself over a much longer time horizon, like 3 to 5 years, and may not be as big of a deal in the next 6 months to a year. That's my opinion.
Well, Chase, I have a question for you.
I agree with that.
So I have a question for you, Chase. I saw the other day, I think it was Jared Dillian from the Dirt Nap fame talking about how some of the best performing stocks have been like sin stocks. I think it was him that was arguing this. And he said that in essence, oil stocks have become a sin stock. Right? And with the millennials, and you're kind of like one of the, I guess you're an early millennial, I would guess. But like, if you, amongst your friends, if you told them you were long like oil stocks, would that be viewed as something that's like, ooh, like when you're trying to pick some girl up, you don't want to tell her that?
I've never really thought about that. I would say the people I hang out with wouldn't look at it that way, but I think if you just did a cross section of especially the younger millennials, I do think it might fit into sort of the sin area. They've just been raised, kind of to view fossil fuels as bad no matter what. I mean, they even think nuclear is bad, which blows my mind. But
yeah, like we're gonna all make it on kumbayas, and like there's gonna be, that's how we're gonna pay, like kumbayas, and Elon Musk he's gonna save the world with all of his battery power, which gets, like, interestingly enough, in California, isn't the majority of electricity created through coal burning? Am I wrong?
I have no idea.
I think it is though. Like, it's a shocking
there is
amount.
A lot of solar and wind, I know, but
it's I don't think it's increasing all the time. But I'm gonna get in trouble from all the millennials that are listening and stuff. But I really think that if you're an investor and you're thinking about the idea of energy stocks, I really believe that there's a chance that they have become the tobacco stocks of our generation. And I think Jared Dillian is on to something when he talks about that. And so everyone's wondering why they haven't rallied with oil. And I think they haven't rallied with oil because nobody wants to admit they're long.
You know what? Then I have to admit that I'm a sinner.
We know that.
One thing I will note that is super interesting in energy stocks is if you look at the ETF OIH versus XLE, it is mind blowing how beaten down like the services companies have been compared to.
So here's the OIH and one second. And what you want me to compare that?
And I
compare that to which one?
To XLE. XLE.
The main.
You know what's interesting is so I went out with dinner with these fellows that were they're older than me. They're boomers and they're kind of wise, shrewd. I don't know how to describe them. Vancouver, kind of
pulling like on a monthly.
Yeah.
Sorry.
I'll actually just do a.
So I went out with these guys, and they're kind of shrewd operators, and they were all buying the oil service companies. So I tend to think that the smart money is buying that.
Well, you know what? Like
I find myself. Go ahead.
Yeah, myself am messing around with the Schlumbergers of the world. They've been the dogs, like Halliburton's and Schlumbergers. They just simply can't get. Even though surprisingly the refiners simply are dogging it too. I mean, it's really the Chevrons and Exxons that have been ripping on the upside, and a lot of these periphery ones just can't catch the bid.
Yeah, absolutely. And for me, like I don't really like shale. I'm pretty bearish on shale, so I was trying to find ways to get into the oil stocks without being super exposed to shale, and that's kind of why I started looking at the services companies.
Yeah.
I mean, granted, obviously they're tied to shale in their own way, but
yeah. Well, listen,
I really like offshore.
I like your idea. I mean, that makes a lot of sense on that regard. Do you like the refiners?
Not as much as the. My favorite exposure is anything I can get offshore. So the companies that are out there, Transocean, and I do like Schlumberger as well. Like some of those services guys, I just think they're going to do better than pretty much than the refiners,
right.
and the big oil companies, because all the big companies it seems like have gone into the Permian and started lighting money on fire for whatever reason.
Right.
To me, that's a giant riddle: is why the majors have gone in to shale where they're not making much money or any money at all. It's weird to me.
Yeah, so here's Transocean, the chart there. Yeah, it looks a lot like the oil service stocks. It just they haven't caught on at all.
Mm-hmm.
So Chase, what else do you like? What other kind of trade ideas are catching your eye?
So I'm a huge uranium bull and have been for like 3 years. We haven't seen much traction on that. Hopefully the Section 232 comes in soon, and that hopefully becomes a catalyst for the sector to start picking up.
This is gonna be a uranium kumbaya between the three of us here because
yes, we all agree on this one.
Patrick, you don't like uranium.
Oh,
too,
yes,
do you?
I do. I've
God.
This is bad. This
okay,
is
so
really bad.
Chase, what's your favorite way to play it?
Everyone should definitely short sell all.
Yeah, exactly.
What's your favorite way to play it, Chase? What are you doing? Like how are you expressing that view?
I combine calls on Cameco with I have Energy Fuels and UR Energy are my kind of two favorite plays right now.
Yeah.
Like the frustrating thing is the fact that CCJ is like really Cameco's the only way you can really get options.
Yeah, exactly.
And the futures contract, everyone said it was a liquid, and I tried to trade it, and a liquid doesn't describe it. It doesn't move. So I wish you could trade futures on it.
Yeah.
So I'll tell you something that people, for those that are more sophisticated, and before I say anything more, I just got to tell everyone that I am long this bond. It's one of my bigger holdings. Energy Fuels has a convertible, and it's only for Canadians. It's listed in Canada, but it's convertible, and so what you get is it's kind of. The bond is such a small part of the market capitalization of the whole stock that it ends up being that there's the credit portion of it is going to be good. It's a 2020 and it's a convertible. And let me just pull up the details. It's 8.5 coupon.
So this is the convertible for the Energy Fuels, which is that UUUU?
Yeah, that's correct. It's EFR in Canada because we have a different symbol. But it's an 8.5 coupon in December 31st, 2020, and it's I think it's one of the better ways to play it because to me, I think from the credit portion standpoint, it's money good, and then what you get is the opportunity if something really good happens to take advantage of it. So it's convertible at a price of, where are we here? I'm just trying to kind of
we're at 439 right now on the stock.
Right, and it's convertible at 415, so it's at the money.
Yeah.
So to me, I just think it's super illiquid. So don't run out and kind of just pay up for it. But it's
Don't
one
go
of those
Scorpio
things,
on it.
Yeah, but it's one of those things that if you're looking for, and if you're sophisticated enough to kind of trade a convertible bond, you should have a look at it, because it's, on down days, it's something that you should be looking at buying, because I think it's a great purchase.
Kind of.
So what else do you
ugly
like?
days.
Yeah, it is had a couple ugly couple of days, but it's, that's just that's the way that the thing trades. It's very liquid. Yeah. It doesn't it makes no rhyme or reason to what the movements, and you guys can put all your squiggles on it what you want. It just, if someone comes in and sells it, it goes down a lot, and someone comes in and buys it, it's going to be one of those things that it just resolves itself, hopefully higher. One of the things that a lot of people play is the U, which is the Uranium Participation Unit. Yeah. Which is an ETF, and you can buy that thing. And the interesting thing about buying it, it's a closed-end fund on uranium, is that you're buying a commodity that is trading below the cost of production. And not only that, the spot is trading significantly below where long-term contracts are being executed.
So it's you don't have that burn.
Yeah, so hopefully it should be decaying upwards, but it doesn't look like it is lately. And as Chase noted, it's been kind of a frustrated. It just hasn't gone. So, just for those who don't know, 232 is what a bill proposed by EFR actually, or Energy Fuels, for the President Trump to stop selling all of their excess uranium and make sure that they're buying a certain amount from local domestic suppliers. Is that correct? Chase, are you familiar with the specifics of the bill?
I think it's just going to be another one of those. I don't think they really spell out the prescription on what to do. I think that's kind of still up in the air. And I know a lot of people are actually worried about what they'll do with that, whether it's quotas or something different. But it's one of those, is it a threat to national security questions? And the way I see it, if automobiles are, then surely the fact that Russia controls so much of our uranium needs, I would say, is probably a threat to national security. So I would assume it's going to go through. But I don't think anyone knows what the administration would do about it if it does go through.
Right. So for those who
for
those who haven't followed it, is that for the longest time, there was all these nuclear warheads that were getting dismantled, and then they were getting sold off into the market. And that's part of the reason that uranium has been in such a terrible bear market, is that all of that fuel had been kind of converted from nuclear warheads into fuel for uranium reactors. And in doing so, it's made it so that there's not that many mines out there, and that if all of a sudden Russia could actually controls the supply of uranium between, I believe, Cameco and Russia, I think that's the majority, even more than majority of the supply. And given how the United States has been treating Canada lately, you can't even rely on us. And so I think the Americans are kind of waking up to the fact that this isn't a good idea, and that they should kind of secure their own nuclear stockpile. And so that's one of the things about EFR, Energy Fuels, that's so attractive, is that it's one of the few kind of American projects. Is that, if I got it right? Is that basically it?
Yeah, exactly. And that's why UR Energy and Energy Fuels are two of the, they produce in the United States, and it's 20% of the U.S. grid is nuclear power, and yet we produce almost no uranium. Wow. So clearly an issue. Right, so the U.S. producers should, theoretically get a nice boost if there is some sort of price control put on, or production control.
Yeah.
All right.
Okay, so what else do you like? Do you have? Oh, sorry. Go ahead, Pat.
No, Patrick? I was just going to ask you, Chase. Is there a fun story behind the name of your newsletter, the Pine Cone, or is it just a name that you just liked?
So no, it actually goes back to Mark Spitznagel wrote a book called The Tao of Capital, and in that book he uses a lot of metaphors to talk about the economy, and whether it's martial arts or war. One of them, he talks about coniferous forests, and he talks about the strategy of the pine cone, and it gets really deep into how pine cones won't open if it's wet outside because they can't spread their seeds. If it's not windy, they can't spread their seeds. They won't open. Some pine cones, like the jack pine, it actually won't even open its pine cones unless it's in a forest fire where it's like 2,000 degrees. And the reason it won't do that is they compete against deciduous trees for territory, essentially. So they kind of sit back and wait for a major disaster that kills their competitors, and then they go in and spread and take their territory over. And the book goes on with different levels of strategy that pine trees or pine cones kind of seemingly implement. Obviously, they don't. Actually, they're not thinking about it, but I just found the strategy in a pine cone to be just really useful as a way to think about markets.
Well, see, I'm glad I asked this question because this is fascinating to me.
It's great. I had no idea.
Yeah, so I wrote a free letter for a long time called the White Mountain Letter, and every one of those letters I would talk about a different pine tree and get into what made it significant in these different kind of analogous ways. So yeah, those are actually I find them interesting.
So Chase, I didn't know you're a big tree guy. What's your favorite pine tree then? You better say the white pine because that's what most of Canada is filled with.
Douglas fir. So what's the story there?
Indeed. So I wrote about this a little bit. It kind of does something called morphological plasticity.
Yeah.
And I'm sure you guys have heard of like neurological plasticity is kind of the ability to adapt. And you think about trees and evolution, you think they probably adapt over, millions of years, and that's true. But like a Douglas fir can actually adapt almost near real time to its environment. There's some of them that grow almost as like shrubs, in like more desert-like areas, and there's some that grow really, really high on the coast of Washington. So their ability to do that, I found to be really interesting, and I kind of wrote about how, as a trader, you have to have that same sort of plasticity.
That's awesome.
That's terrific. Have you gone to the redwoods, by the way, while we're talking trees, or the sequoia?
Yeah. So I live in Southern California now, but I lived in Northern California for years and got to spend some time, especially the coastal redwoods, the Avenue of the Giants, which has a lot of just massive trees. So and I've written about them as well. They're pretty crazy.
I took my family up there, and it was one of the greatest trips we've ever done. Like, it's outstanding, and I would highly recommend it. And actually, my wife's going back, and she's going to go to the sequoia because the sequoia is a little more inland. The redwoods go right on the coast. And have I got that right? Yeah, I think I've got that right. The sequoia, the redwoods are more on the coast, and the sequoias are more inland. So she's going to go look at the sequoias. And I believe the sequoia is the biggest tree, but the redwood is the tallest. Is that right? Like you seem to be much more.
Right, yeah.
You sound like a much more of a tree expert. But till you go there and get an idea of the size, it's mind blowing. And then the fact that they went and just cleaned all those trees out. And if you're in San Francisco, you basically have to drive 5 hours north. You have to drive far enough that they couldn't haul the logs back. Like that was it, because these trees are like 300, 400, 500 years old, or even older, I believe, at times. So you have to go kind of so far north that they wasn't economical for them to kind of cut them down and bring them into San Francisco. So it's just fascinating.
Yeah, and the Muir Woods actually is right outside of San Francisco, named after your namesake there, John Muir. And you can see some redwoods that are actually kind of close, pretty small forest, but it's a really cool place.
Yeah, I was joking with Brent Johnson the other day because someone asked the favorite underrated movies, and he said Spy Game, and I told him that was the second coolest Muir out there, and that was because Nathan Muir was the character, Robert Redford's character in Spy Game, and I said, and the number one is, and I said, it's not me, it's John Muir, and so I can always tell somebody that's grown up out west, because some people have trouble with my name, but for those that have kind of been around San Francisco, they all know John Muir because of Muir Woods, and it's all of a sudden. Exactly. They asked me if I'm related to him, and unfortunately, Muir is not that uncommon a name in Scotland, even though it's uncommon.
Yeah, and speaking of Brent, Brent's a good friend of mine, and he, you asked about macro thinkers earlier, and I think everyone thinks of him as a gold guy, but I really think that Brent is a really good macro thinker and a very original macro thinker.
Yeah, he was one of the first guests on the Market Huddle, and I had a chance to meet him out when I was in San Francisco a couple times. So and out in
Yes.
Vancouver. So he's a super guy. I'll vouch for that.
Super nice guy. Although we are kind of worried as gold bulls, or not worried, we're kind of excited about the fact that he's closed his gold fund.
Yeah, he's called the
and-
bottom
and
on gold.
He's called the bottom on gold. He's closed his gold fund and given up on it. So we're kind of as long-suffering gold bulls, we kind of view that as a positive development. And
Yeah,
Brent,
but
if
if Eric Townsend gets long oil, I'm done. That's
okay, Patrick will quietly be just no comment to
No
that
comment.
thing. But and he didn't laugh, but I did. Okay, that's a great line, buddy. Okay, well, Chase, thanks for spending some time with us. Why don't you just kind of, in following up, why don't we tell everyone one last time where they can find you? Give us the Twitter handle and the website.
Yep. Twitter handle is @PineConeMacro, and the website is pineconemacro.com. And then if anyone wants to read a letter, my weekly is called The Cascade, and there's a Pinecone Macro research tab on the site. That's how you can get to that to sign up for it.
Well, that's terrific. Thanks a lot. It was great having you
Yeah,
on.
thanks
Chase.
a lot, Chase.
Yeah.
Take
Pleasure,
care.
guys. Thanks for having me
Cheers.
on.
Okay, see you
Cheers.
later, bud.